Gold and silver have done exceptionally well over the last 20 years. We've got some charts here to look at that show that it's gone up fivefold or even near sixfold in the case of gold. But it's not just gold and silver that have gone up. Stocks and shares have too. So what's better? And in terms of beating inflation, which is what gold is supposed to do, has it done that? Well, the answer is emphatically yes. And cash really does look pretty awful to hold right now. So let's dive in and talk about gold and silver's performance and how we can learn from it going forward into the future. Hello everybody, Backyard Bullion here and welcome to another Precious Metal Ramble. So I'm not a charts guy. I don't particularly like looking at charts for silver, gold, S&P 500, whatever it might be. But at the same time, there is some really interesting data in here to talk about that I think is relevant to the world of gold and silver as an inflation-beating asset. That's one of the reasons why so many people buy gold and silver in the first place. They think, and maybe rightly so, if we have a look at some of the information here, that this stuff, silver or gold, will beat inflation and you'll have more money in your bank when you come to sell it at the other end, if you do come to sell it. Some people in this world don't like the idea of ever selling their gold and silver and just having it as a hedge. And that's one of the things that I think silver and gold is really good for as part of a diversified financial portfolio. Now, I'm not a financial expert or advisor, so please do make your own decisions when it comes to investing in precious metals. And I would highly recommend that you do a lot more research than just watching my video. That said, if you enjoy this video and everything that we're doing on the channel, don't forget to hit that thumbs up button and maybe subscribe if you're not already subscribed. So, charts. Oh, beautiful, beautiful charts. Right. Where to start? You can get quite lost within charts, and I think it is important to not overread the data that comes out of them. You see a lot of channels that will just look at the bars and the candles, and they'll go up and they'll go down, and they'll read in all these trend lines and all of this. And there is no doubt that we can see, you know, an upwards trend line on these charts here. Using my pen to demonstrate it, there we go. So you can see that those charts are going up. You can see the silver charts here at the bottom. There we go, are going up, but also have spikes and go down as well. But there is a general trend line upwards there for silver. Now, as you can see, I'm not really very technical with this. I've printed the charts off on paper, I know, right? We've also got some S&P 500 charts here to compare against too. So one of the reasons why I wanted to do this and talk about this is because there's a fascinating thread over on the Silver Forum, which I will link in the description box below, where a gentleman bought a bunch of gold in 2018, pre-Brexit split. He got some nerves, didn't like where things might be going, so decided to sell his gold. And he sold it in 2018 for approximately £950 per ounce, which is where we've got one of these charts. So if we look here, we have a 5-year chart, and it's a bit small, but you can see the 5-year low up here, 946, and the 5-year high, 1647. So huge changes, and with the current price of gold, we're seeing a 67.29% increase in the price. Now that's quite the change in price point from what this gentleman could have had. He had 8 ounces total, so he could have had a very nice little tidy profit on that. However, he said that he was very happy with the decision he made, and that's absolutely fine. It's not for everybody, and he put it into stocks and shares. Now, this is just one indicator. This is not representative of every single stock and share out there. Some do a lot better, some do a lot worse. But one of the surefire things in this world is the S&P 500, and as you can see over a 5-year period, very similar performance to gold. 64%, if we remind ourselves of the gold chart there, it is at 67%. So gold's slightly better than the S&P 500. Even more so if you'll have cashed out 2 weeks ago when gold was at all-time highs. So we can see that there's definitely two schools of thought there. Gold is not the definite only thing that you can get that beats inflation. And in fact, over a long period of time, the S&P 500 has time and time again proven to be an inflation-busting metric, an inflation-busting investment. So a quick word from today's video sponsor, the Wealth Research Group, who have a plethora of really great resources and information about investment principles, stocks, shares, gold and passive income, and a lot more to boot as well. They have a free to download report all about the Moody's recent decision to downgrade the US credit outlook to negative. Have a look at it. There's a link in the description box below. It's a really good read. And it really is important to truly grasp that the world is afraid of the size of national debt. The lack of any plan or willingness by any party to even address it is also equally as scary. And it really does scare investors. And it could mean that for the next 5 to 7 years, we will see debasement of the dollar and other currencies around the world of up to 4 or 5% per year. That is a lot, and it will have a big impact on gold and silver, as well as other markets all around the world. So our good friends at the Wealth Research Group have kindly put together a report, which is exclusive. You can find it down in the description box below, and it details exactly why, what, and when they think the most important steps ahead will be. So go and check it out. Links down in the description box below. Thanks all, and back to the video. Now, I'm not a stocks and shares investment guru or trader or anything like that, but it's always struck me as just numbers on a screen. That's why I think it's important to have a diversified portfolio, to have some precious metals in there as well. So this gentleman, we don't know anything more about his financial circumstances, and everybody's situations are different. For him, he wanted to have something a little bit more traditional, a little bit more in this modern world, rather than physical bullion holding in your hands. So there is benefit to be had from the stocks and shares market. But from my perspective, whilst I have stocks and shares and I invest in stocks and shares and have various different exposures to various different markets around the world, as you always should do, you should never have everything in one basket. It is important to remember that those are just numbers on a screen, and we have seen humongous crashes before. Gold and silver have the benefit of a gold or silver lining. They will never go to zero. They will always have some value, whereas stocks and shares can and have in the past completely vanished from the face of the earth and go to zero. And Lord knows I've had a few stocks which I'm sitting on quite considerable losses. It's important to remember, again, to diversify and have small eggs in bigger baskets, I guess you could call it. I don't know. There's sort of a description there that I'm not quite getting right, but you get my point. So it is important to remember that from a perspective of gold and silver, it's not the best thing. It's not the only thing in the world. And we should always just respect what other people's decisions are and opinions are. Because this gentleman, we all maybe think and laugh at him going, yeah, well, he missed out on 67% growth. But if he just stuck it in the S&P 500, he's got an equivalent amount of growth as it goes anyway. Now, in terms of the inflation data, I think this is the most interesting. So one of the coolest charts to look at is the 20-year chart for gold. You can see here that the 20-year low for gold was £210 an ounce. That's right, £210 for an ounce of gold. Oh my goodness, I wish I'd started stacking back in 2003. Crikey. And of course we can see that there has been a big run up in prices. There's been a spike and a drop and then a run up once again over this last 5 years or so. So it's a really interesting metric to have a look at. But what's that in relation to inflation? So inflation is the devaluation of our currency over a period of time. It means that a certain amount of goods and services that cost you X amount in the past would have cost you X amount in today's money. So if we go to the Bank of England's inflation calculator, if you had £200 and you just had it today, what would you need to have to buy £200 worth of stuff? And the answer is £349. And you can see that there is a very, very big difference in the amount of money there. Now that's partly down to a long period of low inflation over these last couple of decades. We really have been quite fortunate. I am not of a generation that experienced the very high inflation rates of the 90s and even 80s. And I do remember my dad, Backyard Bullion Senior, telling me numerous stories about 13, 14% interest rates. And if you have a mortgage at that rate, blimminack, it's not great, is it? So we can see that we've been in quite a gilded period over this time. And there's a lot of moaning about inflation. We've seen some inflation figures come out from the UK today saying we're now at 4%, which is starting to go in the right direction. So that, I think, is really very interesting. But it does show perhaps that over that 20-year period, of course, the value of cash is useless compared with the value of assets. So we look at gold and we say, well, if you'd invested gold in 2003, £210 an ounce, £1,584 an ounce now, that, as we can see here, it says 584% increase. That's quite a lot of cash. On the S&P 500 side of things, whilst I couldn't find an exact 20-year chart to tell me a percentage, I do have here, it's about 1,050, and then it's 4,495. So that's about a fourfold increase, about 400 and something odd percent. Gold doing better than the S&P 500 over that 20-year period. So definitely something to think about from those perspectives. So yes, basically, gold is good. Gold is very good. But what about silver? Is silver any better? Well, let's have a quick look. So here is the 5-year chart for silver. We can see that it was all lovely, lovely, lovely. And then, oh my goodness me, COVID hit and everything just hit the fan, quite frankly. But it's been very static since COVID. We have this new norm, this new sort of level that's been hit, which I think has replaced a lot of, we can see here on the 20-year chart, we can see where this new sort of line was here, this bottom line after the big rises of 2011. That's reset now. So we can see that baseline. And I think that's quite telling. But over this period of time, we have a 70% rise in value, which compared with gold is 67% rise, so silver doing better. And if we go up to the 20-year chart, 500, I can't see it so small, 507% rise. So gold better over a 20-year period to silver. Now, of course, it depends when you got into silver, because silver, if you bought in 2011, you'd be sitting potentially still on a bit of a loss. So there's a whole host of different things to factor in here, is what I'm trying to say. And what we can all agree on is that it's better than having cash in the bank. Cash in the bank just sits there and is inflated away. If you have interest rates that are half decent, you might be able to just about get away with not losing money every year. But generally speaking, your money will work for you better if it's put into something that's real. A house, bricks and mortar, stocks and shares. I say something that's real. Stocks and shares often are described as not real, but they are in very many different definitions. You could define them as real. If a company is a company, it does trading, it's there, it exists in this world, it's making money, then that is real compared with just sitting your cash in a bank account and loaning it to the banks, basically. So lots, I think, to unpack from this video. And I know it's kind of a bit of a whirlwind, whirlwind sort of stop on the world of charts and inflation and price comparisons for various different time periods. But it certainly has reaffirmed my belief that gold is great, silver is great, assuming that you get in at the right price for silver. But there are limitations on how good it can be. It's important not to have, everything in one basket. Don't go and buy every ounce of gold that you possibly can with all the money that you have. Have a think about the various different avenues that might be out there for you. For some people, investing in the stocks and shares market might be better. However, there are people like me who will very much have that, one finger in both pie. Is that the expression? No, I don't know. I make up platitudes every single time I film. It's hilarious, but you get my point. It's important to have multiple avenues for your cash so that if the stocks and shares go down and the gold goes up, that's great, you're fine. If the stocks and shares go up massively and gold goes down, then again, you're kind of hedged across the board. But one thing that both do is that beats that money in the bank, and you can't put a price on that. So yes, it is an interesting world of charts, and that's the most that you'll ever see from me in terms of having a look at charts for gold and silver. Don't think they are something to worry about. I don't think that you should sit there and watch all these trend lines from all these other channels and YouTubers out there that go, it's about to explode and go to the moon. It's not. It's a slow, steady climb, as we've seen from these charts. Yes, there's been a big spike in silver in 2011, but that's not going to happen necessarily in that way again. And even if it does, it will crash back down. That's just the nature of markets and things in this world. So that is my ramblings on the subject of charting, inflation, and what's really the best thing to look to buy. So let me know your thoughts down in that comment section. It'd be great to hear from you what you have to say on the matter. Have you got into gold recently, or are you one of those lucky people sitting on a near 600% return when you bought your gold 20 years ago? If you would like to share your thoughts, please do feel free to do so down in the comment section. Otherwise, don't forget to hit the thumbs up button if you've enjoyed our ramble about precious metals. And if you are in the Cool Kids Club, you know that you are super extra cool, but I here tell you that again. And thanks all for watching. We'll see you next time. As always, please make sure that you like, share, comment, and subscribe for more.